The Bank of Canada just raised interest rates again for the 10th time since March 2022. What kind of impact is this going to have in real estate market? I'm going to be explaining that for you in today's reaction video. And the second article that we'll be covering is the banking regulator, OSFI, is mulling over changes to prevent risk from the negative amortizations and that they're planning to apply to the broader market in the near future. Now, if you're a little bit concerned about where the market's heading with all these kind of changes that are coming with the interest rate and all these negative amortizations, and you're looking for some kind of tactical help on what to do with your portfolio, your property that you're living in, or just generally what actually makes sense for you and your unique situation, you could book a call with me using the link that's on the screen. It's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and the question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name is Zhen, and I run and operate a RE/MAX in the Greater Toronto area on top of making awesome educational real estate content just like this one for you. And we found any of this content helpful in your real estate journey, whether you're buying, selling, or investing. And make sure you help me spread the knowledge by smashing the like button and subscribing to the Prime Properties TV channel. And the first article we'll be reviewing is Bank of Canada raises key interest rate for the 10th time since March 2022. So yesterday, the very predictable interest rate hike came along, and we are now at officially 5% on the overnight rate. So remember, we were at 0.25 in at the end of the pandemic, called like January 2022, and now we're at 5. Yeah, quite a big jump, right? Quite a big jump. So I'm going to point out a couple of things that are in the monetary policy report and just some notes that I think are actually important that are highlighted here, right? So the first one here is that the central bank thinks that we're going to return to 2% inflation. Remember, I pretty much said that I don't think we're going to get back to 2% inflation because it just doesn't make sense because of all the macro effects coming along, right? And now they're saying that they're going to return to 2% in the middle of 2025. So they originally predicted that we'd get back to 2% in the end of 2024. So now they've pushed this out by 6 months. So their forecast right now tells us that they think inflation is going to persist longer, right? So it's not transitory, right? Now, one of the things I will point out that is we are coming down on the inflation, and that's great, but it doesn't make everybody's day-to-day life any less expensive, meaning prices aren't going up as fast. But if you do groceries, you'll know things have gone up, right? Now, the other thing that they put here is since inflation has been above 2% target for the last few years already and isn't expected to return a target of 2% until 2025, the bank warns that it's possible that inflation expectations remain higher for longer and that the progress towards the 2% target could be jeopardized to return to price stability, right? And it could stall. So essentially what they're saying is, look, rates going to probably stay longer and higher for long. They may not stay at this 5% overnight rate, which means mortgage rates like variable are like 7%. Fixed rates are all over 6% now. So it may not remain that high, but it's not going to get back to what people are accustomed to. And it may probably stay in like 3 or 4 much longer than most people expect, right? So despite the Bank of Canada sounding rather hawkish in their announcement today, I did also find it strange that there was no announcement of another rate hike coming. Again, we won't know because the next one isn't until September 6th, right? So what does this all mean for the real estate market? And this is what I've always said. Inventory dictates short term, and then these rates dictate medium term, and like population and the big macro fundamentals dictate long term, right? So in the short term, 30 to 60 days, knowing that the interest rate hike just happened, I think it's going to potentially be the straw that breaks the camel's back for a lot of people out there, especially investors. So for the investors who have like a mortgage at Scotia or National where the payments are going up each time the rate hike's coming, it may not be tolerable anymore for them and they may sell. So I suspect that inventory, because of that reason, should be building up in the months of July, August, and going into September. And because of this rate hike, I suspect a lot of buyers are going to be out of the market as well. So as the inventory builds up, we're going to be probably going into September with a lot more inventory than what we're expected. Do keep in mind, we're still below the, 10-year average, but it's increasing at quite a rapid rate. And then because sales aren't going to be happening because people are a little bit spooked out, I suspect that bulk in inventory going to fall could have some kind of impact, right? Now, if September 6th has another rate hike, I would suspect that buyers are still staying on the sidelines, and then we have a lot of inventory buildup because usually a lot of people wait until the fall to list, right? But if there is no rate hike, again, we don't know what's going to happen. Maybe people continue negative amortizing like what we saw last year in September 2022. That's kind of what I can see very clearly right now with this latest rate hike. And one of the weird quirks in all of this is because the people who are selling are generally going to be investors, I suspect we'll probably see a lot of properties that are listed that are tenanted, right? So if you're kind of in the buying market right now and you're trying to find something for yourself personally, if you can see past the tenant stuff and you have tenants that aren't cooperating, this is actually an opportune time to find something that's kind of below market and kind of snag it up because the seller's motivated, the tenants aren't cooperating. You just have to look past that, right? Now, there's two other things that the article didn't touch on that I do want to kind of touch on, which I also found very interesting. They basically said here from the report, in addition, the housing market has seen some pickup. So now Bank of Canada is calling this out, right? So which I found very interesting. And the new construction and real estate listings are lagging demand, which is adding pressure to prices. So if prices continue going up or they don't see that it kind of like stalls or goes down a bit, I would not be surprised if we see more rate hikes. And here's the second part that's actually even more interesting that they called out. Strong population growth from immigration is adding both demand and supply to the economy. Newcomers are easing the shortage of workers, which is, keeping the the labor market propped up, and boosting the consumer spending. But at the same time, it's adding demand for housing. So it's a catch-22. You bring in more people, it makes things look better, but inflation keeps going up. It's a cycle over and over and over again. Kind of like how I talked about before, where like a 30% of the current inflation basket right now is made up of housing cost increases because mortgage rates have gone up. So it's just like circular reference over and over again. Yeah, it's going to be interesting. So I would say for anyone that's in the market right now, if you're a buyer, I would just hold off. Let's see how much pain there is, how much listing there is, right? And if you can find a deal, go for it, right? But if you're on the selling side, it doesn't make sense to be selling right now because I think the demand is going to be really weak. But the amount of inventory that's building up could be good or bad, depending on the market and what kind of asset you're looking to sell. So if you go into September with like another rate hike and stuff builds up, it's going to probably be really bad in the market. But if it, kind of doesn't have a rate hike, but some inventory is being absorbed in the summertime, it may not be that bad, right? So that's kind of the, next 60 days of what it looks like for the real estate market. Now, the last thing I want to cover real quickly for you is bank regulator molds changes to ensure banks can absorb mortgage risk. This is kind of like very, very deep in the weeds into like real estate and mortgage stuff. But essentially, the banking regulator, OSFI, is requiring that the people who are lending out the mortgages, the banks, right, that if they have anything that's negative amortizing, they need to hold more money on the risk that that loan defaults, okay? So what this article is referencing is this OSFI proposal to change mortgage risk, preserving access to Canadians. In short, what I'll tell you is this. The banks who allow for negative amortization, so like the static variable rates, so your TDs, your BMOs, your RBCs, and your CIBCs, right? Essentially what's happening is if you have a book of mortgages where the loan to value is greater than 65%, which is very, very common because most people are buying 20% down, which means their loan to value is 80%, right? So this applies to everybody who doesn't really have a down payment of greater than 35%, and they start negative amortizing, right? So what they're going to force these banks to do is they're going to have to hold more money as risk, right? In case these mortgages kind of default and they don't recoup it so that there's money to kind of pay it back and not cause risk into the system. So it's not being implemented right away, right? It's kind of just like in talks. But what this will do is change kind of some of the rules on whether they have these kind of mortgages that allow for like negative amortization and like all the trigger rates talk that we've been talking about for the last year or so. So because they have to put more money aside if this gets implemented, what's going to happen is that money that was put aside can't be lent out by the other banks. And that capital is expensive right now because there's a cost to it, right? So if that money can't be lent out, it means that the bank's revenue, their money, isn't going to increase, right? So they're going to have to find other ways to increase their revenue or make up for it, meaning that there is a very good chance we'll probably see rates at higher because the amount of money that they can lend out is lower. So they would have to lend out money at a higher rate to make the same amount of revenue for their bottom line. So I suspect this could be like kind of a good change in the future so it doesn't like put people at risk. But right now, for consumers who have this kind of mortgage, nothing's changing. I think this is a great kind of proposal that they're putting out there, but a little bit too late given that all of this has already happened, right? But you know what? In case the market comes back, this could probably be a good thing in the future. Kind of like how we retroactively look back. The stress test turned out to be pretty good for the market. Anyways, I hope this gives you an idea of what's happening in the real estate market. There's going to be a lot of chatter and buzz about the Bank of Canada interest rate and what's going to look like and how the market's going to go crazy, crazy downwards, a lot of inventory build up. I'll be watching that. I'll give you guys an update onto how much listing gets kind of built up. And kind of like how I was saying in the last video, listings are building up really quickly, but July and August tend to be very slow months of new listings. But if that kind of breaks the seasonal trend, I suspect we're seeing that risk and that straw that broke the camel's back for some investors. Anyways, if you are looking for some help on how to navigate this real estate market, given the interest rate hike and kind of these new banking regulatory changes, you could book a call with me using the link that's on the screen. It's right here, www.chatwithzen.com. Until next time, your move, your future. See ya! Now that I'm done watching this video, I think you should check out this video. And you know what? Why don't you check out this video too?